Welcome back everyone to this week's weekly analysis as we go through a few important key things regarding fundamentals as well as technicals. Now, to start out with the technical side this week, just to switch it up a bit from last week's analysis, so what makes up our watch list this week is really consisting of euro and dollar pairs, not necessarily euro dollar in and of itself as a pair, but more so a euro yen cross. And so if you think back on what happened with the yen, it basically acted as safe haven due to that stock market and equities selling off. So now it seems like if you look at the weeklies and the monthlies, we have a very clear higher low formation along with trend lines and even a monthly pin bar candle formation, which suggests a very clear bullish run, bullish momentum that is about to commence. Now, it's not entirely confirmed just yet, so this is on monthly. We have to look on the weekly as well, which is slightly confirming. As you can see, I have an alert just at the highs of just below the 125.90 level. So if we get anything around that, any higher high around that level, I'll be looking possibly to go for a long position. Now, position size, obviously risk managing is key in this one, and you always have to let price breathe a bit more, especially in pairs that have so many decimals like the euro against the yen. Switching to the pound in this case, the pound New Zealand was quite a nice trade last week. However, we came down to make just about 3% at the 1.86 level, but at the same time, price quickly returned to the upside and showed this formation, which could be a inverted head and shoulders as well as a pin bar, but again, not totally confirmed due to the negative confluence that is showing from the 50 EMA and 189.90 resistance level. So this could still make it to the downside, still sell off, and we could still see the 183 now. And this brings me to the pound, and this brings me to basically talk about a bit about the fundamentals. So today we have an important vote in the UK Parliament, as the Parliament will vote on Theresa May's Brexit deal. And so, as of right now, it's expected that she will face a heavy defeat and the plan will be voted down, basically making a couple of outcomes possible. One of them is that the first one is that she will have 3 days to come up with another alternate plan, which, to be honest, they didn't produce anything for 2 years, 3 years now almost, so 3 days is not going to do anything. And the second is that the Brexit deadline date will be pushed forward. So instead of the end of March, we will probably see an extension of the deadline anywhere between 3 months to 6 months to possibly even a year. There's no way to know that. Now, at the same time, what's even more important is that there's a growing sort of emphasis on a second referendum, which has been popping up for the last 6 months here and there every week or so, but now it's been getting real headlines in which a second referendum is much more likely. I'm not too much into politics, so I won't comment with my own views or if it's a good thing or not. It doesn't really matter. What matters is that as of right now, regarding big business and those who shuffle money throughout Europe and the UK, they would benefit as the way things are now, basically, than if Brexit would happen. So we can expect a pound rally if we see an extension to the deadline, if we see a rise in a second referendum, which possibly would have the outcome of the UK staying in the EU. And so this is what, and again, there's no way to know if Brexit would actually happen within 5 to 10 years, if it would do good or not. But the point is that that would induce fear. And the comfort level of where everything is now, everyone is slightly happy with. So to not basically ruin that sort of comfort or remain would be good for business. And so this is why I believe that the pound will be able to rally, which means that if the pound rallies, then this pound New Zealand will decide on its fate and it probably rally. At the same time, pound against the dollar looks to be have some early buyers into this pound dollar, clear higher high on the daily and the weekly, as well as the 1 hour. Also, this is in conjunction with a dollar sell-off, so it's not so much trustable, because the dollar sell-off is making every other pair buy up a bit and rally. But at the same time, if we have this Brexit positive pound Brexit outcome, then the pound will most likely keep on rallying. And that's basically it. We have two more pairs. We have the dollar yen, which is again rallying just like the euro yen, which we talked about. But with the dollar, you would have to buy the dollar in a environment which is now is really selling off. So if we check the DXY, we can see. Let me just pop it up. So DXY. And we can see it coming down and basically selling off. So you don't really want to buy dollars when we are seeing downside on it. So that said, this is why the euro yen is a better buying scenario. And meanwhile, every other pair that we looked at from last week, we have the euro Aussie and the euro New Zealand, which are based on the New Zealand and the Aussie rallying as commodity currencies against the US on the sell-off, as well as between how the US-Sino-China trade deal is basically seeing some positive announcements that as well should basically strengthen the Aussie and the New Zealand, which is why we are still expecting this euro Aussie and euro New Zealand to sell off to the downside. If that's the case, then any lower high on the intraday or daily will present a good selling opportunity. And that is really it for this week's outlook. Be sure to keep an eye on the Brexit announcements, and possibly we'll be able to trade the pound. Cheers for now.